Hey, what's up, everyone? Good morning, traders. Good morning, YouTube. Hope everyone is having a great day here. We just had the CPI report. That's the main thing that we're going to be talking about. The CPI came out this morning, and it is what everyone was waiting for, what everyone was looking for. And we're going to talk about that data, what that might implications, and what else we have going on here. So, over the past few months, we've seen that inflation had been topping out, right? CPI prints, PPI prints, PCE prints have been tapering off and then cooling off necessarily. And today was one of those pivotal reports that we wanted to see to kind of get a understanding of what the next market move might be and where the Fed's next move might be. So we didn't get that crazy of a deviation from the expected number, right? The prior number from December was 6.5%. January's number was expected at 6.2. We got a slightly hotter print of 6.4% for the CPI year over year. Now, the month over month came in as at expectations. 0.5% expected, 0.5 came in. The revision from December, I think, was 0.1%. Don't quote me on that, but I think it was revised to slightly positive from slightly negative. The US core CPI number year over year was expected at 5.5%, prior 5.7, and it came out at 5.6. So still, in comparison to the prior prints, right, we still have a slight drop off of 0.1% in both the core and the year over year CPI and the year over year core CPI, right? So the US core CPI came in month over month as expected, 0.4%, which is a slightly elevated print from the 0.3% in the previous reading. So this is an interesting move because technically we are still slipping lower, but the expected number was not met. We got a slightly hotter print. So it's not necessarily giga bearish, right? It's not necessarily giga bullish either, right? It's kind of somewhere in the middle. So we're still staying within this limbo in the overall market. And the Fed funds future are now pricing in top Fed funds rate of 5 to 5.25% by July versus earlier near even odds seen of a higher Fed funds rate. So we had the expectation of a peak in January of 4.75 to 5% in May, right? And now it's pretty much at 5 to 5.25%. So we'll see how that kind of comes out. Realistically, the CPI data, it is pretty much unchanged, right? If I'm taking a look at this, this is from about an hour ago. I believe that data might have changed by now. But realistically, what we have here is still about 93% of an expected 25 basis point hike. The hike odds actually increased slightly from yesterday, right before the CPI data. Right now, 94% chance of expected 25 basis point hike versus prior 90% reading, meaning there's only about 6% chance of a 50 basis point hike coming into March. And that 50 basis point hike would take us into the target rate by July. So only 50 more basis points are expected by July to kind of navigate this market and what's going on right now. So in terms of the CPI print, it came out on Valentine's Day as well. Happy Valentine's to those that have loved ones. But that's none of my concern, none of my interest. But we also have Bank of Japan that hits the spotlight today as well. That we're going to be talking about. What else? We can talk about some of the Amazon stuff as well, and then we're going to go through some levels and what can be expected from today and potentially the remainder of even this week. So. We got a new nomination. Professor Kazuo Ueda from economics professor has been nominated as the Bank of Japan's next governor, right? Ending the weeks of speculation among global investors, and he's set to succeed Kuroda, who will be stepping down in April after overseeing a decade of policies that aim to shake off the deflationary environment by keeping interest rates at an ultra low level, right? Ueda is known as a soft-spoken, pragmatic academic, but was also a former member of the central bank's policy board and kept close ties with the BOJ since leaving the position in 2005. So why is this important? The BOJ is the last major central bank on the economy to maintain an ultra loose policy. However, questions have swirled over how long that could last in the wake of inflationary pressures. I think BOJ is still under the inflation is transitory proposition that Jerome Powell had abandoned not too long ago. So The Bank of Japan's signature yield curve control is in regards to this, right, which has become increasingly difficult to defend in the current environment. So many previously thought that the top spot at the BOJ would go to a seasoned central banker like Deputy Governor Masayoshi Amamiya. I'm not sure if I'm saying that right, but the surprise nomination of Ueda could mean things could be changing in terms of direction, right? Amamiya was one of the key architects of the monetary policy over the past decade, keeping those ultra low rates. So if we have someone that changes that perception, right? Japan would be entering into a more restrictive policy should that change naturally. So putting the spotlight on this, right? Japanese inflation hit a multi-decade high of 4% in December, which was the double of the BOJ's long-standing 2% target. So earlier today, the country's Q4 annualized GDP growth expanded only 0.6%, which was much less than expected amidst slumping business investment. So we'll see how that shapes up because, like I said, it's one of the last, or it is the last economy to kind of take a tightening approach. We'll see how the other economies continue their tightening scale, and if BOJ kind of integrates into that, we could see a little more downside in the overall market as we have seen in other economies as well. So in terms of Amazon here, just some news because Amazon has been beat down over the past several days. We'll see if they spark some joy with this. But Amazon CEO Andy Jassy is planning to double down on the company's struggling brick and mortar business with a retail behemoth ready to go big on physical stores in 2023, blaming the pandemic for ongoing struggles. And Amazon has yet to disrupt the grocery store sector since scooping up Whole Foods for about $14 billion in 2017, limited traction. While locations have been closed down and a related $720 million impairment charge was recorded in the Q4 results. So we'll see what that contributes to. It's a new news event for Amazon. Now, naturally, Amazon had been beat down a little here. And if I take a look at this chart a little more, right, we're gapping down on this news, but it held out like the 95, 96 region of support realistically. If we start breaking back under that, like 98, you get into a distribution block that could bring things lower. But this inflation print, what had happened today, should lead the charge for the next few weeks of market movement realistically. But it kind of came out in a more neutral tone realistically. It wasn't a crazy beat. It wasn't a crazy miss. And based on that, I think we'll see how this week shapes up to give us an understanding of where the remainder of the month and the quarter might go. So I have a slightly bearish lean on the day if we're talking about the ES futures right now. Let me just open this guy up. This chart. So I have a slightly bearish lean. I'll tell you guys why. Because we have a distribution block. We have a distribution block that sits at 41.65 to 41.68. That's the top of the distribution block. The bottom of said distribution block, 41.05 region to 4100, was defended extremely well yesterday, which is something that we talked about in the update, and you saw how well that bid held. So now we're defending the top of that distribution block. The announcement managed to push price above, running some stops, but now we're kind of into the middle of that area. Now, if we start losing some of those key areas and we close under 4100 today, I think there is some potential downside to come in next week and the following days into Friday. I think those sellers are going to try to really hammer this down. Maybe 3950 region is going to be a target. But today, as we're looking at this, 4141 is a key area. Right now, into that 40 region, we're trying to defend it. There was two strong buys off that area after the report came out. And if that kind of overcomes with sell pressure, we're going to be targeting the 32. If the 32 gives out, I really, really think the probability of seeing 41.05 is very high. So I'm going to be leaning towards that. It's going to be a little harder to get bullish if prices don't start rebidding off the open at 32 and 41. And downside move, in my opinion. So that's what I'm leaning with today, right? Slightly bearish bias based on where we are sitting within this big distribution block and how those distributions are getting defended. So with that being said, I'm going to post some analysis on Twitter. Check us out at TradeProAcademy.com and Trade Pro Academy on Twitter. Post some analysis there, give you some kind of visualization, as well as check out our website. We traded this live in our room today, the CPI report. Had two trades. One of them was a loss, but just one of them was like a little jab towards the end of the morning session before this update. A little jab at like a 2-lot long from about 50.51. Took like a little stop on it. But the main trade that was organized and mentioned was 41.68 to 41.72 short, ran it down to 41. So that more than made up for pretty much the day. So if you want to check us out when we trade events like these, or just every day, honestly, live, check out tradeproacademy.com, and I hope to see you there. So we'll chat soon, and let's get ready to trade today. This is going to be a very interesting day. Let's see if the buyers can manage to attempt to bid this up off the open and what happens from there. So hello, guys. Laurent, Barbara, AD. I hope everyone has an amazing trading day. Keep in touch with us, and I'll see you in Discord. So thank you and take care. See you tomorrow.